income is a continuous stream of income earned from efforts previously made in terms of either monetary investments or time investments. So by monetary investments, I mean you used your money probably to buy real estate, or you invested in dividend stocks. So you'll be getting your passive income from these assets. And by time investments, I mean setting time apart to use your expertise probably on a project. This can be writing a book or even making a YouTube video. So where do you start with these investments? So you first need to start with researching on your areas of interest and investment options, and putting into consideration your personal and financial situation. Once you do your research, then you can evaluate your current resources. Do you have the money? If yes, you can proceed to purchase an asset. If you do not have the money, then you can look at your area of expertise and what value you can add to invest in that and earn passive income in the future. Then next, you need to set your investment goal. By this I mean you need to have a guide as to how much passive income you expect to earn from these investments. Then finally, you need to start the investment and be very patient and also proactive with the investment, so that now in the future you can reap the maximum benefits from your investment.
So I will categorize an investment as being solid based on the investment objective that one has. So if I'm talking to a fellow youth, given the time horizon that we have between now and retirement, we can delve into investment vehicles that are perceived to be high risk, but there are also an expectation of high return. That's because we can endure the volatility in these assets. So I would recommend, if that time horizon is long, one invests in shares. There could be a lot of volatility in the short term, but in the long term, you stand to gain good returns. One can invest in real estate. It's perceived that real estate requires a huge amount of capital, which you may not afford. But of late, we've been seeing listings of real estate investment trusts, which means the real estate investment has been brought down to the common investor. With just about 10,000, you can get into a REIT and count yourself as having invested in a property. Those are long-term investments that will give you returns which, when reinvested back into the portfolio mix, will give you a good return at the end of your horizon. Investing in stocks can take two dimensions. You either go direct to the market and buy for yourself, but that will require that you have a lot of proficiency in terms of understanding what you are getting into and analyzing that investment. There is an indirect route whereby you invest through a fund manager. Fund managers are professionals who have an expertise in handling matters in investments. So going through the fund manager has the advantage of having your portfolio optimized, first through diversification, because the fund manager has a pool of funds, which means he can onboard several asset classes or assets, shares that are not correlated, which at the end of the day gives you an optimal return. So I would recommend that you go to a fund like CIC Asset Management or the CIC Money Market Fund. The rate that you'll get with CIC Money Market Fund is basically higher than what you will get by going individual into the bank. And here you are basically just required to invest a minimum of 5,000 shillings.
The beauty with being young is the time you have to learn and unlearn about life and investments in general. So a solid investment vehicle would obviously be something that is balanced. And as we spoke earlier about the growth assets and the capital preserving assets, you need to find a balance between these two and also consider the objectives you have for yourself and also consider your attitude to risk and the capacity to risk. So once you find a balance in these investment vehicles, you will have a good place to start. Then the other thing you need to consider about being young, you need to be frugal and also have a good savings habit. This will help you in starting a savings plan, which you can do by starting an emergency fund with CIC Asset Management and opening a CIC Money Market Fund where you can start your emergency fund since it's very liquid and a safe investment vehicle. Then it's never too early to have a retirement plan in place. So make sure you set up one in place for your future. And do not be afraid of debt, but always borrow wisely and avoid unnecessary debts and bad debts. Anytime you borrow money, make sure you use the money for the intended purpose. In conclusion, the opportunities to invest while you're young, they are endless. You need to remember the best asset when you're young is the opportunity for compounding interest and time. So in summary, we've been talking about investment objectives, having goals, setting a budget, starting an emergency fund. All this summed up, you need to take now a step forward. And my best advice is to think about opening that CIC Money Market Fund account because it's quite easy. All you need to do is set apart 5,000 shillings to start and open an account with us. And you can open an account for your child as the guardian, you can open an account for yourself, you can open an account as a spouse, or even your chama. And guys, let's remember, we're still in the middle of the pandemic and we need to observe all protocols set by the Ministry of Health. That is to wash your hands regularly with soap or to sanitize with an alcohol-based sanitizer. Keep your social distance and always remember to wear your mask while in public places.
And we'll never let you down. CIC
Insurance Group. We keep our word.